Hi everyone, welcome to my Personal Finances PodCat, episode 53. And today we're going to talk about invest in a moment with MYTHEO. And so you guys would have realized that I'm actually on my phone because my internet totally failed me. So without further ado, let's talk about MYTHEO. In May 2019, GEX MD, which is the JV of Silver Lake and Money Design, launched MYTHEO to tailor the investment service for Malaysians. Hence, it's called MYTHEO. And they aspire to change the way everyday Malaysians invest for good. So today we finally have the masterminds behind MYTHEO to share with us some insights that we are hoping to help all of you get the best out of MYTHEO, the robo-advisory platform. Without further ado, let's welcome everyone. Hi, Matt. Hi, Mr. Amir. Welcome to the show. Can you guys hear me?
Yep. Hi there.
All right. So for the benefit of our audience, could you please introduce yourself?
Yeah, sure. So my name is Matt Stewart Box. I'm the COO, the Chief Operating Officer for MYTHEO, and very glad to have the opportunity to speak today. Thank you.
Thanks for being on the show today with us. And about yourself, Mr. Amir?
Okay. Hi everyone, my name is Amir. I'm actually portfolio manager for MYTHEO. I'm joining MYTHEO since the day one actually. So this will be our second years with MYTHEO. So thank you for inviting us for this webinar.
Right, we are so honored to have you guys on the show today. So other than thanks for the brief introduction, but other than that, I will have some 5 quick fire questions to both of you, just for the audience to get to know you a bit better. It's slightly more personal, so just be casual and relaxed about it. So, and you guys feel free to start whichever who are comfortable with, okay? So the first question would be, what motivates you in life and work? Who wants to start first? Mr. Matthew, or?
Yeah, sure. That's a good question. That's good. For me personally, what motivates me is my family. We have 3 children here, and all growing up fast. And for me, it's wonderful to see them grow and develop. And so what motivates me is to try and provide for them and make sure they have all the opportunities they can going forward.
That's nice. And what about yourself, Mr. Amir?
Okay, for me, what motivates me is always being myself. I try to improve myself. You can see that I always, that I always the first person to arrive in the office. I the one that actually leave the office the last one. So I always work all the time. So, but at the same time, I spend most of the time with friends, families, and I actually spend a lot of time with all the communities as well. You look every Saturday, I always have a chit chat with all friends, discuss about financial planning, about this investment or this project and everything. I think friends, family are what motivate me to be here.
Interesting. All right. So next question is, what is your personal definition of financial independence?
My definition of financial independence is the ability to choose what you do, the ability to choose how you spend your time. And in some cases, that may be you choose to work. That's perfectly fine. But the fact is that it's a choice means that you have financial freedom.
Right.
Yeah, that's a tough question.
Yeah, it's meant to be spontaneous, and there's never right or wrong with this answer, actually. And what about yourself, Mr. Amir?
Okay, for me, financial independence, actually, I have enough money to do everything. No need to work 9 to 5. I can buy whatever I want to buy. I have the best gadget in the world without thinking about need to find more, to dig out more money to buy another good gadget. And the most important thing, I will retire with not much headache in my head. So I just can retire freely, no need to bother about working anymore.
And it sounded like the most important to you is as long as you can get all the gadgets that you want. All right, next up, important question. How do you save and invest?
Oh, right. That's good. Good question. Yes. So, my personal investments are very, very simple. I invest in a bunch of mutual funds, mostly, to be honest, mostly index funds. I'm originally from the UK, so most of my savings are in a UK mutual funds. And there's like global equity indexes, global bond indexes, that kind of stuff. Low cost, very simple, very transparent stuff. Nothing fancy.
It doesn't have to be fancy as long as it works. And what about yourself, Mr. Amir?
Okay. As a Bumi, I always invested in Amanasa Bumi Putra, ASB, because it's low risk, definitely with certain return. Definitely, I put a lot of money into MYTHEO as well. Then I buy a lot of stock also, stock for high risk investment across several countries like Thailand, Malaysia, Hong Kong, and US. And I just buy for long term. Every time I buy, I just close my eye and I open my eye again 2 or 3 years later. Long term investing.
Interesting. All right. So next up is what's your favorite quote?
Sorry?
What's your favorite quote? Like, like motto of life or a favorite quote that you live by?
Yeah. Right. Yeah. My favorite quote is my favorite quote relating to investing is the one from Warren Buffett, that investing is it's simple, but it's not easy. And it's simple because really all you need is exposure to the market for as long as you possibly can. That's why it's simple. And the reason why it's not easy is because everybody's emotion gets in the way. You see the market fall, you panic, you sell. You see the market go up, you feel great, you add more money. Emotion gets in the way. It makes bad decisions. And that's why investing is not easy. But the core of it is very, very simple. That, for me, is the core of investing.
Interesting. All right. And what about yourself, Mr. Amir?
Okay. For me, I have a very famous quote that the whole industry know about it. If I mention this quote, everybody knows it's originated from me. So I always long-term invested. My quote is, short-term trading is just like teh tarik, tasty but not healthy.
Okay. That's very localized.
Yes.
Okay. All right. So
It looks like we may have lost.
All right, it looks like Catherine has dropped off the line. I think she's having there's some internet connectivity issues ongoing today. But no worries, Steve here. So I'm the founder of MyPF. You may have occasionally seen me as well, co-hosting with Catherine actually. Yeah. So let's continue on with the next part of our discussion. And again, thanks so much, Matt and Amir, for being here today. And we truly trust that today's session will definitely be beneficial to everyone who's actually listening in. So for all of you who are following us on YouTube or on Facebook, go ahead and hit the like and subscribe button. And yeah, we look forward to everyone benefiting from the session as well. We will be taking some Q&A and questions and comments as we go along as well. So do go ahead and type in those questions as well. There was a little bit of feedback as well. So Ken Seng Lim over here, he really liked how you guys shared about the definition of financial independence and how it's totally different from how the regular or normal answers that everyone gets. So yeah, that's an awesome way to just kick off our session. All right, let's kick off with the very first question. So we know that there's been slowly but surely growing robo-advisory platforms in Malaysia. So how do you view the emergence of more robo-advisory platforms in Malaysia? Is it something that you're welcome in the scene? Maybe Matt, can we get your thoughts on this?
Yeah, sure. Yeah, so I have some experience of the growth of robo-advisory business in the US and in the UK. And I think the path that Malaysia is following is very similar to some of those other countries. I would say, overall for MyTheo, we welcome new entrants to the robo-advisory market. It's still a very, very small market, a very small business. And, what we need is, more entrants coming in, growing the market. There's plenty of space for other entrants to join. I think going forward, what we'll see is perhaps some more sophisticated offerings coming into the market. And in particular, to do with tailoring of portfolios, the ability to customize portfolios more closely to the needs of individual investors. I think overall we're very happy about new people joining, building up the market, raising awareness of robo-advisory.
All right, that definitely sounds that. Are you saying that it's better as the pie continues to grow, as more sophistication occurs? That is basically a win-win situation for all parties involved.
Exactly. There's plenty of space for everyone to grow in this kind of environment. We're still very early days for the robo business, certainly in Malaysia.
All right, definitely exciting times ahead, that Matt. Then let's look directly at MyTheo itself. So how is MyTheo, right now, looking at the robo-advisory scene in Malaysia? How is MyTheo uniquely differentiating from your competitors out there? Maybe Amir, you can start us off, and Matt, after that, if you have any points to add, we would love to hear your viewpoint as well on this.
Okay, on the onset, you can see that all robo-advisors in Malaysia, they come to do what you call financial planning, to replace the human advisor that have been around for so many decades. So in that sense, we are no different than other robo-advisors. But if you look at in terms of process, in terms of partnership, we have partnership from Japan, basically with Money Design. Then the way we structure our portfolio also a little bit different compared to our competitors. You know that we actually classified our asset into 3 different groups: growth, income, and inflation hedge portfolio. So for those investors who want to invest more into high growth profile, high risk investment, they just can go higher allocation to growth, and somebody who want more stability just can go through income portfolio. And the one that want to have already reached, they think they already reached, they want to protect their wealth from actually inflation, they just go straight to inflation hedge. The 3 functional portfolio that we do actually different compared to other robo advisors in the market.
Before you go on any further, Amir, just for all those who are new to MyTheo, can you just give us a super quick rundown? What's the difference between growth, income, and inflation portfolios?
Okay. Our growth portfolio actually make up 100% on equity ETF. Our income portfolio basically only invest in bond, and our inflation hedge basically invest in all other what we call real asset, consists of gold, other metals such as silver. We also invest in real estate as well as infrastructure and inflation hedge bond. That's a rough overview. We will discuss more detail during the webinar session.
All right, thanks for sharing that, Amir. Matt, how else besides the differences in portfolio, is there more that MyTheo has to offer that's uniquely differentiating yourselves?
Yeah, I think Amir touched on it, but the key point from my point of view is MyTheo is unique in terms of how we tailor our portfolios to individuals. Every individual is different in terms of what they need from investing. Everyone has a different time horizon, different needs, different purpose for investing. And what's unique about MyTheo, I think, is the ability to tailor that portfolio to match the needs of the individual. And maybe when we go through the presentation, we can explain a little bit more about how that actually works in practice. But in my mind, that's the biggest difference, I think, of MyTheo compared to some other robo-advisors.
All right, thanks for sharing that. And speaking of sharing, I'm made to understand Amir has actually some a deck actually that he wants to share with us. So Amir, feel free just to go ahead and put that out, and we can go through that while Kat is back as well. So let me hand over the mic back to Catherine.
Hi guys, I'm back. So sorry for the interruption. Amir, please go ahead. And we are waiting for your slide.
I think I already share my slide. Let me share. Let me reshare my. Okay. Okay.
Great.
All right.
So sure, I'll go first, and then Amir will follow after. Thanks again for the time today. I'll cover two areas. One, I'll give an introduction, a bit of background about MyTheo, who we are, what we do, and I'll also look at how MyTheo can help investors. We'll look at some examples of some portfolios. And then I'll pass it over to Amir. He'll talk more in detail about the investment process and what makes MyTheo unique.
All right.
Okay, so can you get to the next slide, please? Yeah, and the next. Okay, great. Okay, so what is MyTheo? Well, it's an automated, personalized investment service. It's completely digital, and what we offer are professional level investment portfolios tailored to each individual. And this is the important thing. As I mentioned, everybody's investment needs are different. Everyone invests for different time horizons, different purposes. They want to take a different amount of risk or returns, different types of returns. And what MyTheo does is we use our own proprietary models to build a portfolio for each individual that matches that individual's needs. We launched in 2016 in Japan. So we have a track record, a live track record of over 5 years of managing, real client money. And then we launched in Malaysia, June 2019. So we're coming up to our second anniversary here. In total, we have about 110,000 users in total. And the total client assets that are on this platform are over $800 million US. So it's a relatively big base. These are all individual investors. It's all retail investors. The point here is not to kind of boast about the size or anything like that, but just to make the point that this is a proven platform. We already have tens of thousands of people, hundreds of millions of dollars running on this platform. In terms of live experience, as I said, we've been live for 5 years in total. People always ask about what are your returns. The point here is each portfolio is tailored to each individual, so the returns are different. But if you look at a kind of like a representative portfolio, an average allocation, then our realized returns over the past 5 years are up on there, 8.2%. So that's not a back test. Those are live returns. 8.2% for 5 years means in total, an investor who'd come in right at the start would be up about 50% right now. And remember, this is 5 years that have been very volatile for markets. I mean, this includes 5 years includes the Brexit vote, actual Brexit itself, US-China trade tensions, China growth slowing down, the Trump initial election, 2 Trump impeachments, all of the COVID panic, economic shock, all of that. It's all included in those 5 years. And despite that, the return is 8.2%. Obviously, that nothing is guaranteed here. Things may be different in the future. Someday they may be higher or may be lower in the future. But the point here is that MyTheo allows you to get access to a big range of diversified global assets, global returns, very simply and very cheaply. Okay, maybe let's go on a little further. Maybe the next slide here. We'll start to talk about a little bit about MyTheo itself. So it's a digital investment platform. Some people call it robo-advisory. That's just another name for it. And the point here is it's very easy to use. It's easy to set up. It's very quick to set up the account. It's very easy to invest. It doesn't take any kind of heavy investment experience. Then, of course, it's personalized. As I said, you'll get a portfolio that's personalized to your needs. And then it's also affordable. I mean, we're able to provide this kind of service through the use of our own proprietary technology. We can share a little bit about of that later on. This slide here gives a little bit more detail in terms of kind of the numbers involved. I like this slide because it's very clear in terms of kind of the numbers. The point here is it's easy to set up. You can literally open your account in 15 minutes. All of the stuff is done online. It's all electronic KYC, so you can get everything set up extremely quickly. You can open your account. You don't need a huge amount of money. You can open your account with 100 ringgits. That's all it takes. You don't need a large deposit to set up your MyTheo account. The management fee is very simple. It depends on the size of your account, but the maximum is 1%. And there's a sliding scale depending on the size of your account. But you'll never pay more than 1% in terms of annual management fee. And then there are no hidden costs. There's no sales fees. There's no redemption fees. There's no transaction costs, that kind of thing. So it's very simple, very transparent, and we found this is one of the reasons that a lot of users have chosen services like MyTheo, in that it's easy to set up and it's very easy to understand kind of what you're paying for the service. Okay.
Yeah, I think thanks for sharing, Mr. Matt. I think transparency is really what the young and retail investors are looking for, knowing that they are not paying more for something that they're not using or stuff. And I just wonder, like you mentioned, that maximum annual fee is 1%, but how low does it get?
Yeah, so depending on the size of the account, the lowest rate is 0.5%, so 0.5%. And there's a sliding scale. We can show that later. There's a sliding scale of the fee.
Interesting. Thanks for sharing.
Okay. Okay. Maybe if we just move on to the next slide. This is another question we often get in terms of MyTheo is a relatively new product. The whole robo-advisory product is relatively new. And so we get questions in terms of, are my assets safe? How secure are my assets? And it's secure in a number of ways. First off, of course, MyTheo is licensed, regulated by the Securities Commission in Malaysia. We have a digital investment management license. So that's one level of security. The other level relates to what happens to your assets. The key point here is MyTheo itself doesn't touch any client assets or any client cash. All of the assets are held in an independent trustee, so Malaysian trustees. All of the assets, all of the client assets are held in a segregated account there, which we cannot touch. And then in terms of kind of digital security, obviously this service is completely run online. And so here we use Silver Lake's expertise here in digital security. So we have an extremely secure Tier 3 verified data center and some state-of-the-art digital security around MyTheo. So clients' assets are protected in a number of ways. One, through the license. Two, through the fact that the assets themselves sit at the trustee. And thirdly, in terms of this kind of digital security that we have wrapped around MyTheo. Okay.
Thanks for sharing. I think it really does give a sense of security for the investors out there, knowing that it's the funds, all the funds actually held by trustees.
Yeah, and again, a lot of our investors, a lot of our clients are relatively new to investing, and so naturally they're a little bit nervous about are their assets going to be safe and so on. Okay, I'll maybe talk briefly about how MyTheo can help people, and then we'll look at some specific portfolio examples. The point here is that MyTheo can be tailored for investors of any age, really. We have a broad range of different clients. We have a lot of very young clients, young adults, millennials. Because maybe they don't have that much in terms of assets right now. Maybe they're just starting to save, just starting to invest. But they have perhaps quite a long time horizon. MyTheo can build a portfolio that matches them and make sure they've got the best chance of growing their assets over the long run. We can also build portfolios for more experienced people, perhaps people who've been investing for a few years. They've already built a pool of assets themselves. They have some sense of what they want to invest in. MyTheo can help them customize the allocation so that it reflects what the individual wants to invest in. And then, of course, we can tailor the portfolios for retirees as well, people who have got their pool of assets. They're perhaps no longer working, and they need those assets to generate income for them, generate regular income, protect their assets from inflation. And MyTheo can be tailored to match that there. So the point is, MyTheo can help a range of different people at different stages through their investing life cycle. Maybe let's go on and look a little bit more about how it actually works. So it's very easy to set up this portfolio. You don't need a lot of experience. You don't need a lot of detailed investment experience. You simply need to answer these 5 questions, and they're very, very straightforward. Things about your age, how much assets you've got to invest in, how much risk you want to take, what's your kind of investment horizon. And based on the answers to those 5 questions, our proprietary model will build a portfolio out of these 3 building blocks. And Amir mentioned them a little bit earlier, and later on we'll show how these building blocks are actually made. But there's a portfolio that's designed for growth. And as Amir mentioned, this is an equity-based portfolio designed to grow the assets over the long term. So it's relatively higher risk, investing in global equity markets. An income portfolio, which is focused on fixed income, so bonds, government bonds, corporate bonds, and aiming to generate kind of more stable returns, a more stable income stream. And then a portfolio that's based on inflation hedge. So this is a portfolio that's designed to maintain the real value of people's assets, protect people from inflation. And so this portfolio is made up of things like real estate, oil, gold, commodities, that kind of thing. But these portfolios can be combined in a very large number of different permutations, well over 200 different combinations of these 3 assets, or these 3 portfolios, in order to match the individual needs of each portfolio, of each investor. Maybe let's go and have a look at an example. This is an example of what you'd get if you answered the questions in this way. And here, this example here is somebody who's 45, still working, has a reasonable amount of assets and quite a long investment horizon. And you can see that pie chart on the top right there shows an allocation across those 3 different portfolios of 40% in growth and 34 and 26. And what this is saying is, based on the answers to the questions, from MyTheo's point of view, this is the ideal portfolio for this investor. And you can see below a back test of this is what this portfolio would have delivered in the past. You can also see some estimates in terms of what you could expect in terms of future returns, future range of returns that you could get. And as an individual, you can go and play around with this. You can change some of the answers, change your time horizon, change your risk level. Even if you want to change these specific allocations across these 3 portfolios until you're happy with that portfolio. And then MyTheo will go and build that portfolio to match your needs and maintain that portfolio going forward through time. This is a slightly more detailed view of it, coming down from the top, answering the questions, coming up with these 3 portfolios. The key point is at the bottom, what do you actually have in your account after all of this? Well, you have a bunch of ETFs. Some people, I think, obviously will be familiar with ETFs. They're really mutual funds that are traded on the exchange. And they're a great way for investors to, even if they don't have a large amount of cash to invest, they can use ETFs to invest in a huge range of different assets, a range of different countries, a range of different asset classes, a range of different currencies. And so even with a relatively small amount in your account, you can get a fully diversified portfolio very quickly, very simply, and at a very low cost using ETFs. This is a very common way of building portfolios. And this is what MyTheo uses to actually create the portfolios for our clients. Okay. Then maybe just one last point from me, and before I hand over to Amir, just to go back to this point on fees. This is a very important point in how MyTheo kind of helps you. You know, we can't guarantee future returns. Nobody knows what the market is going to do in the future. We can't guarantee whether the market's going to go up or down. That bit can't be guaranteed. But what we can say is that fees definitely hurt your returns. Any fee that you pay reduces your returns. And if you think about like a normal investment product, there's a bunch of different fees that you end up paying. A lot of people charge some kind of initial upfront fee, and that can be 3, 4, 5%. Then they'll charge like an annual management fee. Some people charge up to 1.5% there. But then there's other fees that you might not see so obviously. Trustee fees, audit fees, trading fees, brokerage costs, commission fees. All of these things will add up and cut down your returns. If we just go to the next slide, we'll show what it looks like from the MyTheo point of view. From the MyTheo point of view, there's no initial fee. You can invest, you can come into MyTheo, you can redeem at any point in time. You will never pay any costs to come in or go out of MyTheo. All we'll charge is the management fees, as I said, that's capped at 1%. There's no trustee fees, there are no other kind of audit fees, no brokerage fees, anything like that. All of those fees are absorbed by a GAXMD, which is the company that runs MyTheo. And so this gets back to this idea of transparency and simplicity. We can't guarantee the future market returns for different assets, but what we can guarantee is that these fees are as low as possible to make sure that any returns you get stay with the investor.
I really like this slide because there are many new investors. I think it's so important for them to know what are their investment costs, and which for a lot of them they might not come across this sort of sharing about what are the fees they are actually incurring to them. And with this, it's actually so transparent, and then basically it's just showing that what other things that can be instead of the market, could there be other things that is actually hurting your investment returns, which can be these charges that you are showing on the slide.
Yes, it's very easy to, and over a long period of time, these fees really add up, and they can, really hurt you. So it's important to know, what are you paying for and what are you not paying for. Okay, that's all for me. I'll hand over to Amir now, and he'll maybe talk a little bit more about what makes MyTheo unique and how the investment process works in a little bit more detail. But I'll be happy to take any questions later on as well.
All right, thanks, Matt. And Amir, over to you.
Okay, thank you, Catherine. Okay, I will continue presentation under part 2. We mean slightly more complicated because I will discuss about how we construct a portfolio, what are the algorithm that we use. I will share some of the performance of MYTHEO since we over the past few years and since inception. Okay, first of all, we start with what are asset class that actually MYTHEO investing in. You can see here, actually, MyPF actually classified asset class into 3 different categories. First, equity. We actually invest, as Matt already mentioned, we only invest in ETF. We have regional ETF, we have country ETF, and we have factor-based ETF. For some people, factor-based ETFs actually something that very new. Basically, regional ETF, basically you invest in ETF that something like Asia Pacific equity. Country ETF, you invest in Hong Kong equity, Malaysia equity, or China equity. But factor base is different. It based on factor. For example, you might want to buy ETF that only invested in growth stock, value stock, or ESG stock. The factor is either growth, value, or ESG, or many more. The second classification, second group is actually fixed income. In fixed income, we have almost all range of the asset. For example, from the lowest risk asset such as government bond to corporate bond to high yield bond, and even we also invested in preferred stock. The real estate is the third group, is something that we are different compared to our competitors. For example, you can see most of our robo-advisor actually invested in gold actually ETF. But for us, we do also invest in gold, but we also invest in other metals such as silver and even the metal ETF itself. On top of that, we also invest in commodity like crude oil, agriculture, real estate, and infrastructure. The real estate mostly REIT and the inflation hedge bond, which means the bond that actually yield went up when inflation goes up. Okay. Why? Okay. What unique about our investment process? That's why we divided our asset class into 3 different groups. The equity will be invested in growth portfolio. Income, you only invested in bond portfolio, and inflation hedge actually invested in a real asset portfolio. So if you want to buy growth, basically you put, assuming you want to put 100% your portfolio into growth, basically you want to invest 100% in equity. If you want to invest 100% in bond, you can put into income portfolio, or you want to invest into real estate, you can put in inflation hedge portfolio. But the best thing is to invest in all asset class as once. Okay, this is how we created our portfolio. Basically, when you have personalized portfolio, we said we have 231 portfolio, 228 portfolio, you will be invested across all 3 portfolio: growth, income, and inflation hedge. Your personalized portfolio is created from combining weight of each of these functional portfolio, all 228. Another 3 portfolio that make up to 231 is if you decided to invest 100% in growth, 100% income, or 100% in inflation hedge. That's how we created our portfolio. It started from functional portfolio approach. It means each portfolio have individual characteristic.
I especially like your explanation about inflation hedge, because earlier when you showed about inflation hedge, now I believe some people might relate that with, for example, fixed deposit, which for some people like point of view, I can just put that in FD and then that will be able to hedge inflation. But the matter of fact is that at times like this, does your FD really hedge the inflation?
Okay, FD basically bring you a flat earning. If you invest in FD, they mention to you the yield is 2%. You get 2% from the day you put in your money until the day you withdraw. So inflation, during those time, inflation could move up or down. So basically, the idea of inflation, when we feel about inflation, is the time when we go to petrol station to fill up our car tank, and we go, or we want to buy new property, buy house, or we go to kedai mamak to buy nasi kandar. You see, oh, why I paying more now? That's all because of inflation. That's why you see our inflation hedge portfolio invest in this asset that affect this price of the thing that you want to buy. That's why we invest in, you know, commodities that affect your price of nasi kandar, and you invest in commodities such as crude oil and also property. That's how we relate. That's how we created inflation hedge portfolio. And okay, to continue with our presentation, if you look at this, if you invest with us, in our growth portfolio, we have 11 ETF. Our income portfolio, we have 10 ETF, and inflation hedge portfolio, we have 10 ETF. In total, you have 31 ETF. And all you need is a minimum amount of RM 100 ringgit only to actually invest in all 31 ETF. Imagine you have 100 ringgit, go to supermarket, you cannot even buy 31 item, even 20 item. You know, that's why how good is our investment platform is, how affordable is our investment platform to all investors. Okay, what actually make our construction, what actually the driving force behind our portfolio construction? Basically, we have 4 sets of algorithm. You can see here 4 sets of algorithm. First algorithm is actually in the blue box here. They consist of 4 different, actually the core algorithm is smart beta, and the rest actually a sub algorithm under the smart beta. And we have also another algorithm in orange box and green box, and that, and the 4th one is actually AI assist. And one thing I want to highlight is each single algorithm actually designed for different type of portfolio. For example, growth portfolio, we only use the algorithm in the blue box. You mean a smart beta. I will discuss more detail on smart beta because I have subsequent presentation slide. Minimum volatility, basically, our algorithm tend to buy more ETF that actually volatility actually lower. Similarly, you buy more ETF that have cheaper valuation, and buy ETF that has a good momentum. Mean good momentum, you mean you always buy a winners, because only the winners that have long-term benefit to your portfolio, just like the football lah. If you bet on Manchester City, Manchester United, and Liverpool, you cannot go wrong because they always have momentum. Okay. And for income portfolio, we have what you call high yield relative to risk, because our income portfolio only invest in bond. So when you invest in bond, like you invest in fixed deposit, your focus is always to get the highest yield is possible. You want to get bond with 20% or 25% yield is doable, but there's a lot of risk associated with it. That's why when our algorithm decide which bond to put into our portfolio, it look the bond with high risk, high yield, but also relative to risk. The risk that we use is a statistical number we call as C bar, conditional value at risk. Okay, for inflation hedge portfolio, as we mentioned earlier, is actually easy to understand. It based on Malaysian inflation rate. We make sure that we put asset class that actually correlate with Malaysian inflation. But we have some issue with that. Typically, the asset class that actually correlate with inflation, such as real estate, commodities, and they tend to correlate with equities as well. For example, if stock market went up, you see that actually your house price also went up, crude oil price also went up. So our algorithm put another algorithm we call low correlation. It means it try to minimize correlation between inflation hedge and growth portfolio. It means is equity market actually went down, our inflation hedge are more protected. So, and the idea behind low correlation actually started from a theory that actually well known and actually being used by all the fund managers, and this theory has won a Nobel Prize in 1990. The founder is actually Harry Markowitz. This theory is called modern portfolio theory. You can Google it, you can read all the finance book that will tell all the details about this theory. Okay, smart beta strategy that I mentioned earlier. If you look at normal portfolio, what I highlight here is actually normal portfolio and normal index. easier for me to talk about index. For example, if you look at KLCI index, the largest component of KLCI index today could be Maybank, CIMB, Petronas Chemical, or Hartaliga. The only reason they are the largest weighted stock inside that index because they are the largest. They're the largest in terms of size, in terms of market value. But smart beta actually different. Smart beta, they change that what we call the way we allocate each stock into a portfolio. For example, smart beta use factors. In this example here, actually my factors actually value. In this portfolio, the cheapest stock, very cheap stock, will have the highest weightage, followed by cheap stock, and the most expensive stock will have the lowest weightage. Similarly, the smart beta also can be applied to other factors such as I mentioned earlier, minimum volatility, ESG, growth factors, or dividend factors, or many more factors that actually can be created. Okay, the last one is AI assist. You know that I mentioned earlier, we actually have 4 sets of algorithms. Actually, 3 algorithms be taken up by each of functional portfolios. But the 4th algorithm actually monitor all portfolio in one go. Basically, it monitor all. Today we have 31 ETF. It monitor all 31 ETF inside our portfolio. Basically, what AI Assist do? AI Assist actually algorithm developed by our Japan money design partner, and it use machine learning to actually identify ETF that have high risk of large fall in near future. Within a month, it could fall by 10%. That's what AI Assist do. So basically, what AI Assist do actually we actually subscribe to a data from Refinitiv. Actually, Refinitiv a very reputable company. Refinitiv market size index. This Refinitiv will actually monitor all the news and market buzz around the globe through social media, Facebook, YouTube, Pinterest, LinkedIn, or blogs. So this platform will cover around 15,000 companies, 187 countries, 45 countries, and 36 communities, as well as 150 crypto countries. So it monitor all news and actually detect what is the sentiment of the market today. Then this data will be fed into our AI assist actually algorithm that we develop. Then when our AI assist analyze this data, he find out, oh, this data have negative impact to some ETF inside our portfolio. In my example, I put here actually ETF A. Then our system will automatically remove ETF A from the portfolio. As easy as that. It's actually a very complicated process, and this process only to detect what ETF they actually have high risk of falling, and you will remove the ETF before it actually start falling. Okay, then let me share some of about MYTHEO functional portfolio. We talk a lot more about algorithm. We see why is actually the positive effect of algorithm. You
I
can
believe
see,
like
okay.
for most audience, like this is the part that they care about the most. This is the part where their eyes are wide open.
I hope. Okay, let me go. As I mentioned, we have 3 portfolio, actually, growth, income, inflation hedge portfolio. For each individual investor, they have different weightage to all portfolio. In my example, we call it balanced portfolio. Our balanced portfolio is 40, 40, 20 because naturally, our inflation hedge portfolio has the lowest weightage across the board. Across all 231 portfolio, inflation hedge portfolio tend to have the lowest weightage. So you look at this, I highlighted 1 year to 5 years in the rate because the numbers actually in annualized basis. For example, if 5 years, the return is 11.93%, you mean your yearly return for 5 years on average is 11.93% compounded. So you can see here, this year usually we have a good year, especially for the growth portfolio. Even last month, in month of March, we actually have return of 2%. Month of April, I don't put it here. The unofficial number I get is actually another 2%, 2%, 2.8% roughly. So you can think that this year we will almost have 10% return year to date. So income portfolio, actually the return this year actually you can see quite a number of negative return over 6 months and 3 months. This because you know that US yield actually, treasury yield in US actually going up. You know, bond relationships only simple. When yield went up, bond price will go down. So I think all this all temporary. If you look long-term bigger picture, actually income portfolio give return of 4.55%. You compare that our fixed deposit today, roughly only around 1.6 to 1.8%, you still get 3% return more per year by just investing in our lowest risk portfolio, income portfolio. Inflation hedge portfolio, you just wanted to track the inflation hedge in Malaysia, but the return for this year actually quite good, basically driven by a strong rally in crude oil price and real estate sector in the US. So if you look at balanced portfolio, basically it's a combination of all these three portfolio. So basically, if you want to be invested, you try to invest at least 3 to 5 years. You can see more normalized result. Basically, 1 over 2 years, you can see some year you might have negative return or performance below par. But 3 to 5 years usually reflect the long-term return of our portfolio. Basically, in terms of growth portfolio, we expect around 10 to 12%. Income portfolio usually more than 5 to 6%. Similarly, inflation hedge roughly around 6% over long term. Okay, market outlook. Okay, as you all know that actually over the past 1 year, actually market outlook very uncertain, but actually your investment, actually most of your investment doing well. But you can see that even MYTHEO also doing well. Why? Even though nation economic is very uncertain, but MYTHEO portfolio actually globally diversified. We actually invested, as Matt mentioned earlier, in 86 countries, and across all three functional portfolio, we have so many asset classes, and these asset classes, we try to make it not correlated to each other. The effect of this is the long-term return become more smoother, and you can expect more sustainable. And risk, one big question, one of question that people ask the most is about currency. Oh, you always invest in US listed ETF, we mean price in US dollar. I think I want to make it clear here. Even though our ETF actually is mostly in 100% our ETF we invested today actually listed in US exchanges. They actually quoted in US dollar. But the US dollar is just a cover only. The underlying instrument of that is ETF actually in another country. For example, Hong Kong ETF actually 100% of share actually listed in Hong Kong is actually quoted in Hong Kong dollar. Similarly, Japan ETF actually all stock actually listed in Tokyo Stock Exchange actually quoted in Japanese yen. So we actually own, actually when you invest in MYTHEO, even though we invest in 100% in US listed ETF, but actually it make up of a basket of currency. So the risk of impact for each currency to depreciate or appreciate against actually smoothen out by buying a basket of currency. Okay, one of the biggest issue we have actually rising US Treasury yield environment. Actually, you go to our blog. We actually publish one long detailed article about US Treasury yield impact to our portfolio, to our MYTHEO portfolio in the last 2 cycle when the yield actually rising. Based on our finding, actually, the only asset class actually affected by rising yield actually US Treasury yield. In fact, other bond asset class such as high yield bond actually benefit from rising high yield because they are more driven by credit risk, not interest rate risk. So lastly is the risk of inflation. As I said, our inflation hedge portfolio actually specifically designed, created to protect investor from inflation. So you think inflation is a risk, you can put more money into inflation hedge portfolio. Okay, before I end my presentation, I have some advice to you, to all investors. First, when you want to invest, this is actually normal advice given by all financial planners. You must practice dollar cost averaging. Never try to time the market. You try to time the market, you will be a person like this, the chart below. Most people actually, when they try to time the market, they actually tend to follow what other people is doing. The herd mentality, you call it. So when a lot of people joining the stock market, then they start joining the stock market as well. They start to buy the same stock. Like today, everybody start to buy data prep. So when you start buying overcrowded stock, hot stock, basically most of you actually buy near the peak because of your greed. Then suddenly the share price actually fell. Then you become panic. Then suddenly you sell right at the bottom. So not just you actually going late into investment, but you also timing wrongly, and that cost you double. You buy at the peak, you sell at low. So that's why you always try to invest regularly. You can actually make use of our regular investment program. Actually, you can do it for any bank. Just doing standing instruction, automatically you'll be invested whether every weekly, every monthly, or every 3 months, up to you. Second, we must practice diversification. If you think there's a hot stock in the market, don't put all your money into that stock. What happens if the stock actually fell? You have no bullet anymore to restart your investing. So always try to diversify as many market as possible, as many stock as possible, or as many asset class as possible. And one thing that is more important is always stick to your investment plan. If you want to buy stock, you want to invest, you want to focus on what are risk level that are comfortable to you. Make sure you always stick to your risk level. You cannot simply change your risk level because stock market already went up. You fear that you are missing out, so you add more into stock that going up. That actually added more risk into your portfolio, and actually cause a more risk for you to lose your money. So try to always investing long term. I know so many people actually try to punt into the market. When you punt to the market, you buy stock that actually very volatile. You tend to look the movement of stock every 5 minutes. You lose over your sleep for nothing. Okay, my final last word. Actually, this actually the quote actually I picked from one of the website. So many people that I asked actually, why don't you invest? He said, oh, I scared lah. I lost money already, ma. So many people, they're scared to invest because they're risk of losing money. But they forgot there's another risk that you have to consider. The risk that you are retiring without any money also is a real risk. Okay, before I end presentation, there is something special that I want to announce here. Okay, for newcomers promotion, if you actually start investing today until 14 May of 2021, you use this promo code, we will give you a 3 calendar month of management fee free of charge. And you can refer your friend to invest with us. We give you duit raya money, 5 ringgit each. You got 1,000 friends, we give you 5,000 ringgit of duit raya money. And this promo period will end until 31st July. Go and try to find more duit raya, please. Okay, that's all. I wrap up my presentation for today. Thank you very much.
Thank you so much, Mr. Amir. We also have viewer feedback that's saying that I've been using MYTHEO for more than a year. My personal opinion is that it's the best in performance and user experience among others.
Okay, thank you for your comment. Actually, because our portfolio make up of so many asset class, we got the benefit of diversification. You can see that over the past one or 2 years, there's so many negative events. Because of this asset class, of this benefit of diversification, you have performance that actually not just positive, it's very, very smooth. it means you don't see much volatility in your return.
Thank you for that. So I guess with that, the slide earlier that you have already shared the top 5 advice or tips for advisors to invest with MyTheo, right? For
Yes.
Mr. Matt, do you have anything to add in? For any tips for investors to invest with MyTheo, basically to get the most out of MyTheo?
I think Amir has covered most of them. The only one I would say is you should start investing now, right now. There's always reasons to be worried about, what's going to happen to the market. Is now a good time to invest? Is now a bad time to invest? The important thing is to be in the market for as long as you can. That maximizes the chance of you getting a good return. You can open an account at MyTheo literally within like 15, 20 minutes. My single piece of advice to people would be to start investing as soon as possible.
Right. Thank you for that. And other than that, one last question is, what do you think lies ahead in the future of wealth management? Now that we see more and more like upcoming emergence of newer digital investment manager or robo-advisory, that what we call it. So what do you think is in the future of this sort of new investment stuff?
There's maybe 2 things I'd mention. One, we've seen in other markets as well. Right now in Malaysia, the robo-advisory services are all standalone services. MyTheo is a standalone service. Other people have standalone services, and that's fine. That's a good way to start. But I think if you think about it from a user's point of view, it may be more useful if that service is sitting on a platform that links to other financial services. So a platform that links to perhaps securities accounts or bank accounts or other financial products. And so what I think we'll see gradually going forward is services such as MyTheo being offered in partnership with other platforms. That should the product itself may be the same, but if it's offered as part of a platform, it makes it much easier to link to other financial services, and so users can see more holistically how they find out their finances is doing, rather than having to look at individual standalone services. So my expectation is gradually these kind of partnerships, platforms will grow in popularity in Malaysia. We've certainly seen that happen in the US and in Europe as well.
Can I add a little bit more? Okay.
Yeah, sure.
Based on the number published by Bangara, total number of deposit in Malaysia today is 522 billion US dollar. 552 billion US dollar, earning something like 1.6% to 1.8%. So there's a lot of market for us to convince people to start investing to a platform that can provide higher return.
Yeah.
In fact, the unit trust industry itself is only 650 billion in terms of size in Malaysia market. So robo-advisor industry is still less than 1 billion. So there's much room for us to grow and much room for us to convince a lot more people to put more money. I think you also have billion also in your bank account still in deposit. So that's why when you see is this 10, you can see that total number deposit in Malaysian market is so a lot, and there's a lot of opportunity for us and other robo-advisor as well, or even for the conventional investment platform.
Interesting. All right. So we also have a question from a viewer, which is asking, is there any particular reason why MyTheo has more exposure to Japan equity?
Okay.
Amir, do you want to take that, or shall I?
Okay. Matt first. Let Matt take the question because Matt from Japan.
Oh, sure. There's no particular reason. Certainly, the portfolio is not tilted towards Japan or any particular country. No. All of our portfolios are driven off investment models, quantitative models, and those algorithms, those models were all developed by us in-house. What they're trying to do is build the best diversified portfolio as possible for each investor. And so it has the portfolios do have individual country ETFs in them. Right now, the model has an exposure to Japan. That will change through time, depending on what the model thinks of the outlook for Japanese equity market. But there's no particular tilt towards Japan or any particular country.
Thank you for your explanation. We also have other questions like, will a time come in the future when the fees currently absorbed by a GAC be passed to the investors, either totally or a portion of it in the future?
Yes, so I can handle that. I mean, there's absolutely no plan to do that in the future. No. As we mentioned before, one of the key points about MyTheo and other robo-advisors as well is that the fee structure is very transparent and very simple. We've got no plans to change that in the future.
That is definitely good to know. Good news for the investors. Right. Another question is there a switching fee?
Yeah, there's no switching fees. No, there's no fees like that. You can switch between allocations, you can put money in, take money out. There are zero fees.
All right. Definitely have the flexibility there. Good to know. All right. Then will MyTheo be introducing new products in the future?
Yes, that's a good question. We are thinking of new products, different ways to provide MyTheo or different versions of MyTheo. We're working on developing them at the moment, and we hope to be able to make some announcements in the reasonable near future. So please stay tuned. We're not stopping just as we are now.
All right. I'm sure we will all be waiting for the good news, waiting for that announcement. All right. So we are almost coming to the end of the session. So to wrap this up, what is that one big audacious habit or goal that you want audience to take action right now? Like Amil or Mr. Matt to start with?
Okay. About investor, why are you not investing today? They still want to wait. They still want to time the market. I said the best time to invest it's not today. Actually, 30 years ago. That's why you must start investing immediately. It's no point putting money into your fixed deposit. Now paying as I mentioned so many times earlier, 1.6% to 1.8%. Earlier, it didn't cover your cost of nasi lemak 5 years from today. Okay. Second, actually, stop. A lot of investors today when they invest, they tend to invest into one product. For example, if they're interested in crypto, they just put money into cryptocurrency platform and put all the money and invest there. It's actually nothing wrong. Try to invest into crypto or any other investment product, but make sure you have to diversify. Actually, diversified, for example, only be done by professional investor. But you look at retail investor, they still tend to buy stock and put lumpy of their money into a single stock, and that stock tend to be smaller cap stock, high risk. One last point actually I want to highlight. Actually, every time I do presentation, people always ask one thing only: return. Nobody care to ask about risk. So you need to educate yourself. Actually, not just focusing only on return, but also on risk. That's all for me.
Thank you for that, Mr. Amir.
Well, I like Amir's answers. Those are good. Yeah, I don't have that much to add to that. Other than the point I said before, it's like and Amir's point is exactly right. The best time to start investing is 30 years ago. That's impossible. The next best time to start investing is right now, and we can't guarantee the future returns, but the way to maximize your chance of making money is being in the market as long as possible, and that means starting investing as soon as possible.
All right. Thank you for that advice. Thank you, Amir. Thank you, Mr. Matt. Thanks for having coming to the show today. I'm sorry for the hiccup earlier. But I'm really grateful for all the sharing, all the insightful slides that are done up by the team. Appreciate that.
We are so very grateful for you, Steve, and MyPF to invite us to give a webinar on your platform.
Great. Thank you very much.
Yep, that is exactly what we believe in. We believe in with having like a session like this so that all our viewers and audience can learn from like guys like you. Right? Thank you. Sorry for the cuteness. Right? A bit of cuteness here and there, but I'm really enjoy learning from you guys. I hope like all our viewers and audience have learned a lot from you. And not to forget, we have our promo code as well, which we'll be sharing in the comments. And I hope to have you guys again in the next session soon.
That's great. Thank you very much.
Thank you
All
very
right.
much.
Thank you.
Thank you.
Bye.